and also to bring in now Mark Todd from FIIG Securities. Mark, great to see you there. Thanks for your time here on Monday Money. Just firstly, wanted to get your thoughts on what Draghi had to say last week and how the market seems to have slowly been digesting it and now really likes what he has to say in terms of also some of those comments coming through from the Spanish Prime Minister as well, Rajoy.
I think at the moment, John has spoken about this for a while. I think it's they buy on the hope. I mean, the short end of the curve and the Spanish and the Italians are going to be well bid because they just presume that the politicians and the technocrats will be forced into action that will support the Spanish and the Italian economies in their bond markets, will go into their bond markets. It effectively puts steepness on. Everyone buys the short end and starts to sell off the long end, and it just pushes that problem further on out the curve. So in reality, it's just that kicking the can down the street on a consistent basis, to be honest. Everyone just wants to buy that short end now.
How exactly would this work? I mean, how is the fact that when the Spanish then ask for the aid, that's when everything starts to kick in? This is what we've been talking with John about this morning. Is that? Can you just explain for us how you see this working?
The irony of all ironies is that they won't ask for aid. They'll ask for assistance, they'll ask for changes to the bondholders so that the bondholders become pari passu with somebody else. So in other words, you'll change the playing ground, and if you're a bondholder and you're worried about where you rank as a senior debt holder, they'll change the rules of engagement that'll say you now rank with deposit holders. And in the event you rank with deposit holders, that means the bonds that were not as popular at trading at higher yields will now become great opportunities to buy. And what they'll try and do is get private investors in. But in the event that they can't do that, the ECB will come in and start buying on the periphery states, and they'll say that you don't need to go and issue bonds because we'll be lending you money directly.
Mark, John Noonan from Thomson Reuters. There's certainly a lot of ambiguity about how this is all going to play out, but the market's definitely in a glass half full mode at the moment, and they're looking for the bright side of things. One of the things they seemed to really jump on Friday night was the fact that the EFSF actually went to to their member banks and talked about setting up repurchasing facilities.
Correct.
Now, do you think that would be effective? Obviously, if you allow the EFSF to leverage up, it certainly increases their firepower. But do you think that the Germans in particular will allow something like that to happen? I mean, repo is almost a dirty word in some quarters.
It is.
Yeah.
It is, John. It is. And I think the issue is, at the moment, the Europeans are going to jawbone as hard as they can to bring other people in to buy their debt. That's the key. And so they know that we've got a handbrake in the Germans, and so they will go as far as they can with the language, and then they'll try and find some constraints around trying to take Italy and Spain out of the market. They want to take them out as borrowers, so they'll try to lend to them directly, and whether it be in the form of a repo, which the Germans won't like, but it'll be in some form. And the idea right now is more to talk it up. And so as a consequence of not doing anything, the short end of the curve has rallied. The Spanish yields are in lower, and so they've got their net effect, and they haven't upset anyone in the German side. And that they'll continue to push that for as long as they can. The real key is to try and get some GDP growth so it can start paying off taxes, and that's the $64 question. So in effect, if you like, time is the only answer to this, and they're just trying to extract as much time as they can before they actually have the ultimate fight.
Yeah, well, I was going to say, I think one of the things the market is congratulating Draghi's on is that he successfully, if you like, passed the ball back to the Europeans to take action, and that's why the bridge is very short. It's a 2-year, 3-year bridge that he's given them. Now, the reason I'm pessimistic is that anytime the ball's been thrown back to the European officials' court, they seem to drop it. What's your feeling on that?
Well, look, the problem has been, John, for a while, and since this started, that we've been aware that the political class and the technocrats just really aren't up to the game. And you could just start writing from 2007, and every characterisation of what they've done has been a poor affair. And so there shouldn't really be that much confidence. You see it in the investor class themselves don't have any confidence, and so at the moment it becomes less and less people participating in the game, and you really have just self-interest. It's the Germans taking the benefit out of the euro, and the rest of the Europe looking to the Germans and saying, we really need them to participate in supporting us. And that's the problem. At the moment, the the politicians and the technocrats haven't really got their hands on some leadership. That's the real key. There's no leadership in that part of the world.
Mark, really quickly, just switching to the U.S., the job numbers on Friday seems to have had this response that, yes, the number was good, but not good enough to take QE3 off the table, and that's why the market had this very special rally, if you like. What do you think? I mean, I said to Bridie before that I believe that the Fed needs an excuse for QE3, and certainly that job number didn't give them one.
That's right. It was a perfect storm in terms of the investor. The investor, the trader, not the investor, the trader. It was a perfect storm where the jobs weren't so bad that your position got absolutely destroyed on the Friday, but it was just bad enough to say that unemployment had started to tick up. And so we know that somewhere down the line that the Fed will come in and give us some money. And the reality is that the Fed will not be giving you any money. They might extend in after Jackson Hole the idea that instead of going to 2014, they'll go to 2015 with the lower rates. But in reality, in this political environment, running up to the way we've got, it's a real dogma, this environment at the moment. The belief that there should not be any debt, the belief there should be some infrastructure spending. They need to have that argument in the political sphere so that somebody gets some sort of mandate on how they want to run the economy. And basically the Fed knows that. So maybe they'll do something in September about extending that to 2015. But the reality is they can't really do much until after November.
Unfortunately, we're going to have to leave it there. Mark, really appreciate your time this morning. Thanks so much.